Time now for the Trader Rundown. Joining me is Dan Deming of KKM Financial. Dan, great to have you on the show.
Thanks, Angie. Thanks for having me.
Let's talk about this stock market reaction to the jobs number that came out on Friday. The number better than expected. I know some people are minimalizing that number, but we do have job growth going on here in America.
Well, I mean, it's a very consistent number that came out. The expectations were met, and so, you know, it was interesting, though, that we saw quite a reaction in the market on Friday. Really, we saw some weakness overseas on Friday, which was dragging the market down. But once that number came out and the market kind of digested it, and plus it was April 1st, kind of new money maybe flowing into the market as well.
Right.
We saw the market rally back, you know, basically gaining back all that loss from the early morning. So, a pretty interesting day. The momentum still continues to appear to be on the upside.
Dan, what's your outlook for this quarter?
Well, it is interesting when you look back over this last quarter, when you look at the volatility the market experienced, and when we saw the market down twice really during that first quarter of better than 10%. And historically, when you've seen a move in the market in a quarterly basis of better than 10% down and then back up, the market, it actually bodes pretty well for the market the rest of the year. We've historically have seen the market rally pretty significantly the last 3 quarters of the year when you've had a violent start to the first quarter if the market's able to get back to where it started.
You're watching that bullish sign, and what else are you watching in the market here for signals about where we're headed next?
Well, technically I'm looking at a couple areas as well. And when you look at the S&P, the 2075 area, if we can get through there, then that probably would initiate, from a technical standpoint, a push back towards that 21 and maybe possibly towards the highs that we saw last year. We've got to get through 2075 though. Right now it's serving as a pretty severe resistance, and interesting, if we even just pull back a little bit, hold above that 50-day moving average, 200-day moving average, which is around the 2014 area in the S&P, you know, that might build enough momentum down there to propel us higher.
What's the VIX telling you?
Well, the VIX is telling me basically it's monitoring realized volatility right now. I think that's where the focus is. And when I say realized volatility, I mean what the market has experienced in the last several weeks. And really, the volatility has been very subdued from a realized standpoint. So the VIX has been subdued as well. The market certainly has implied, based on the Fed, the way the Fed's handling the situation, that you know, that they're going to be very accommodative moving forward. And so therefore, the market's got a nice backstop in place. And I think that's another reason why you're seeing the VIX stay at these subdued levels.
Thank you, and have a great trading day.
Thanks, Angie. Thanks for having me.